All right, team, rock and roll. It is a new week, a full week actually. Welcome aboard to our market recap for the week and preview of the next week. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Sunday, June 23rd, 2024. Glad to be with you to talk about the markets and kind of prep ourselves for the week incoming. It's been a kind of a weird 3 weeks, kind of a grind higher, but we had so many catalysts: the Fed, CPI, we had a holiday with the Juneteenth holiday, last one. And we got another holiday coming the next week after this one. Imagine that, July 4th. So, kind of, trying to figure out how we can kind of get around this kind of choppy weirdness that we're getting. So, it's kind of between one or two choices between buying the dip or selling the rip to all time highs. So there's a couple of data points I want to go over before we begin this video, and a couple of things I want to go over. So just want to start with the top, saying that it was a very rough week. Trades that we've had expired worthless. For example, the XOM trade didn't work out for us. Not happy about it. This is a video that I kind of feel like, oh man, I hate doing these. I hate being the bearer of bad news, but it happens sometimes. I went back to look at the other videos that we've had during tough weeks, January of this year, September of last year, and kind of getting a gauge of how we recovered and how well we did afterwards. So I know right now doesn't feel good. Kind of the performance that we've had, and I'll go over that here in a second. But this is how the market is sometimes. It can be very cruel and tough. It'll humble you, and really, what makes the difference is how we respond. And we're doing this for almost 10 years now. This will not be the last time we have these kind of weeks, and this isn't the first time either. So with that being said, here are futures. Dow futures are down 10 points. Nasdaq's up 34 with the S&P up 0.07. The Russell's up 0.04. The thing that stood out to me right now, the dollar's up 105.85. The fact that stocks are higher and the dollar's up above 105 is a little strange to me. I can't say it's concerning, but I can state off the rip now that I do not expect stocks to move higher this week. I don't. I've been kind of waiting for that pullback in order to kind of see a discount, maybe, see if we could retest some levels, but grinding higher slowly and then kind of chopping around, pulling back slightly depending on the stock you're looking at. But again, not easy, not easy. A lot of fake outs out there. The expectation I see in the market is a pullback. End of June tends to be one of the worst 2 week periods, this past week and this week, of the year seasonally, the past 20 years. So the expectation, like I'm reiterating, is weaker in stocks. That's what we're kind of looking at. But if the stock market goes higher, then I really don't know what to expect, because July, the first 2 weeks of July, are the strongest seasonally. And when you're looking at seasonality, guys, understand that's really just flow of money. Okay, so that's just equity flows, people buying stocks in their funds, mutual funds, institutional clients, high net worth individuals, you name it. It just seems to be that time, fund rebalancing, July. So kind of July, we're expecting that leg up. So here's what I really want to show everybody. I put this on the live market blog for everybody, and I put a statistic. The S&P 500 with 31 new all-time highs so far in 2024. Just understand it, 31 new all-time highs. This is the best start of a year in any election year in modern history, like ever, since they've ever recorded this. Other years that have 31 all-time highs or better in this point of the stock market, the median, meaning the middle of the time, take all the data points and right in the middle, is 9.6% gain. The S&P on Friday closed at 5464. You can see it right here. That's the S&P spot. A 9.6% bump for that level, meaning higher from here, would be 5988 S&P by the end of the year. So the bull target is 6,000 on the S&P, right around there, give or take. That would be 12 points away from that median number. So I asked the server, hey, what do you guys think? 14 people, 78% of voters said yes, 6,000 or beyond by December 31st. 6,000 is not happening. 3 votes say no. And 1 person is just going to see the show. So 6,000 S&P would be my bull target. I think I'd have to agree with that. I just don't know if 6,000 is going to be exact. And there's a lot of things that are helping this. Interest rates are going to go down. That is the expectation, the baseline. The problem I have is that priced in already? That's the key. The reason the dollar's higher, guys, is because compared to other countries, they're cutting rates. We have Bank of England. I don't think Bank of England has cut rates yet. We have the Eurozone that cut rates already. You had Switzerland that cut rates already. We also had Bank of Canada cut rates already. I don't think Bank of England yet. I have to check. But we're seeing some dovishness, some rate cuts from these other developed economies. The United States has yet to cut rates, as we know. We just had a Fed meeting. Nothing happened. So again, I think that's already priced in. What we really need to price in for the 6,000 S&P is we need a broadening of this market. It cannot be the same old guys. It cannot be only tech. You need this broadening of rally. So, in a weird way, we kind of want money out of the semiconductors, out of these big cap techs, and move it into financials, which have done well. I haven't timed it perfectly, but financials have done well. Materials, the cyclicals, shopping, retail, those names. It just cannot be the same guys all the time. Guys, that is not sustainable. To make that very clear. Let's take a look at the weekly here on the S&P, equal weight S&P. This is all 500 stocks equally weighted. S&P 500 is not equally weighted. It's a little different, as you know. For example, Nvidia is the heaviest weight, then Microsoft, Apple, for example. So if those three stocks fall, SPY falls pretty quickly. Or if they inversely move higher, S&P moves higher. But it's not indicative of the entire market. So RSP for your notes, that's important. That is the equal weight S&P. The good news is you're above the 20-week MA, the 20-week moving average. That's a good sign. You're above resistance. So at least for now, we're kind of holding up. That does give me at least some sense of, okay, positivity moving forward. We know that this week and the next week, like we've said, they tend to be weaker, the last 2 weeks of June. And let's go ahead and kind of have that assumption in our head that we're probably going to get a pullback this week. And if we don't, that's fine. We'll be fine. No problem there. July is really where the meat comes in. If we get those flows and we can break out on equal weight S&P above 170, that is a very good sign moving forward because we know rate cuts are coming. We know at least earnings has been very, very solid. Earnings per share expectation just keeps going higher. So money is flowing. Imagine this is with high rates. If you have lower rates, that's more economic activity. The only issue I have that stands out is possibly inflation. And I think that's always the fear, but we are getting lower prices across the board. PMIs are giving us at least that hint. I know it's a little bit more macro that we're talking here, but guys, there's not much happening in terms of anything else. There is no earnings to really play this week. And in terms of economic data, we have GDP on Wednesday, and that's about it. So really it's going to be technicals. It's really just kind of viewing what levels we're watching and so on and so forth. So let's go back to the text. Let's go ahead and go over the week that I just had in terms of options. Not good. Look at this. 1 out of 7. The worst week of expiry for the year, 2024. And we are in June. So right at the midpoint of the year, basically. ExxonMobil, Chevron, Valero all did not work out. Thought that cup and handle was going to hold, did not. Chevron rejected, and Valero rejected right as I got in. Expecting that oil was going to climb higher, it did not happen. So I take the Zells there, and that hurt. Freeport McMoran, the FCX calls, hit 30% in the money and then reversed. Hit worthless. Nike, same thing. The gap fill, push higher. I'm going to talk about that on a separate video with our options members. Got as high as 27%, guys, and it reversed. These reversals happen. I was looking at the videos that we had, and I shared it on the watch list and charts for our members so they can see kind of the sense of context. It's the exact same thing. It's those reversals. So how do we change it? Do we put stops there? Some of these things happened overnight, so really can't do much, and that's the issue with options. Futures, you have a lot more control. Apple puts we talked about last week. If you guys remember, Apple, we talked about that. This is what kills me. Apple, we closed too early. If we would have just held, we would have been 60, 70% in the money. We knew this pullback was going to come. We knew that was going to happen. I just closed too damn soon. I actually chased it with Masterclass trying to get that pop to get to 220, and I lost that one too. So a double hit. Just tough. The good news is that Apple has been good to us, at least for the year. We rode this high below above 200 on the WWDC. I mean, we've been riding Apple now, guys, since April, since the earnings in May. Back when it was around 170, we rode it all the way up. So done very well. Now what we expect is below 205.10 to get me to 200. Again, just a retest of resistance. And if that holds, I think that's a really great place to possibly do some buying. The problem I have is all of this is not profitable. All of this is nothing to do with the business growing. It's just expansion of multiples. That's really it. And I love Apple, guys, but what have they done that's growth? The only thing that stood out and we expected was ChatGPT, and that's what helped. ChatGPT really made the difference here. Is this really worth hundreds of billions of dollars in a market cap? Probably not. But Apple's a big part of the equation of the SPY and the S&P. We know all that. Warren Buffett owns it, yada yada. Retest of 200 if we break it, which is definitely possible. But again, the July seasonality may just get us this bounce here. 6,000 S&P. Remember that bull case? Apple's going to be a part of that one way or another. They're a big part of it. So just get me to 200. We'll see what we get if we hold there. But below 205, I want to short to 200. I also put a couple of names on our watch list for the week. Again, we have a lot of work to do. So again, the week of July 4th is not going to be easy. It is a short week. So again, the idea is just to be careful. That's really what we're trying to do. I got another one here that I can go over. Amazon was one, and that's on the watch list. Breakouts. There's a couple levels that are breaking out. Look at that. Triple top doesn't exist, right? I guess people don't believe in triple tops, possibly, but that's a breakout. Amazon is going to go higher. We need to get above 189.29. If we do, I definitely want to go long. This is a name that has been kind of thrown aside, not been part of the rally of Nvidia and Micron and Apple, right? It's been in that kind of lumped in with Google. Amazon and Google have been kind of the same grinding higher sort of thing. And Google's doing the same. 182.52. It's a breakout. Now, if we have the other side of the coin where we pull back, TQs. TQs are cheaper to trade. Now, again, we could always trade futures. I prefer futures when we're trading indexes. But again, for those options traders, below 73.67, now it gets interesting. Why does it get interesting? Look at this weekly candle. That's not good. Usually a topping formation, this kind of candle. This was a good candle. Remember we had this and then that pop. But the last time we had this kind of reversal candle was very clear right here. And then we had the pull back. This one had one as well. And then we had to push higher. So can't really depend on just one candle. But again, usually this kind of candle, shooting star, is a reversal candle. Usually. Now again, this could all change if one name goes higher. And his name is NVIDIA. And if NVIDIA bounces, no matter what happens, QQQ is going to bounce with it. Let's take a look at the daily. And this looks like a candle that's holding on to a very nice channel here. And right at support that I drew there, 124.11 being support, 120 being hard support, being your 20-day. I think NVIDIA does bounce higher. We're 11% off the highs. Quick correction on NVIDIA. NVIDIA's been on fire, but sometimes it gets sold off quick. That's probably due to the insiders, execs that are selling, what have you. So we will see if NVIDIA catches some buyers here. The buying appetite for this name has been insatiable. The question is, does it hold this channel? So TQs, if you're looking for a bear chart, Apple looking for a bear chart, Amazon, Google looking pretty bullish. NVIDIA, possibly too. I think it does move higher as well. Let's take a look at Micron. I got one more. Micron above 142.92 gets it interesting here. Above the 200-day on the 1 hour anyways. 134.75 for a break below. You're right in the middle. And why do I have that? Because you have the 20-day right there. So if NVIDIA bounces off that 20-day, Micron's going to bounce with it. So the question is, which do we choose? That's really going to be based on the options volume. It's going to be based on momentum out there. Right now, the market seems relatively flat. I'm surprised. Bitcoin's down. You would think stocks would be pulling back here if the risk on assets like commodities, copper and silver. Well, silver not so much, but copper being a little bit more of a growthy kind of asset. It's a good proxy to show construction. If people are using more copper, companies, industries, the price is going to go higher due to demand. That's usually a good sign of an economy growing. For example, when China was really growing infrastructure, copper prices were through the roof. That wasn't really inflation. That's just demand. There's a difference between supply side inflation, where you just don't have enough to feed the demand, and there's demand side inflation, where you got a line across the block for your hot dog stand. Your hot dogs are just really great, and you're going to charge more because, well, you can. That's what it is. Welcome to capitalism. Bitcoin again being down. That's kind of concerning. The fact that NASDAQ is higher and then you have the dollar higher, that seems to me very Nvidia-ish. This is just Nvidia being higher. So again, we have two ways to kind of look at this. If we're looking at the bull side, again, Google, Amazon. If we're looking at the bear side, Apple and TQs, if that does pull back. I can't say I'm expecting the world here, and then I say that, and then we soar. So, I'm just going to take it step by step. It's been a tough couple of weeks. I just want to make sure that we do everything right and we kind of get back to our winning ways. Let's get a new streak going. Let's get some blood pumping, and that starts with a Monday. So Monday morning, I will see you guys again. Have a great rest of your evening, and I will see you guys tomorrow. Cheers.